Welcome to a new season of Market Makers IL, where we pivot slightly and do a deep dive into the world of private banking. We're going to tell you why, we're going to tell you how, we're going to tell you the details of some of the products. We think you're going to learn a lot, we're going to have a lot of fun, and we hope you do too.
And still, no suits, no ties, and we'll leave no question unasked.
And we'll be talking about conversations that talk about shekels.
And some dollars.
And no investment advice. And we're back. Michael, it's great to see you back on the set here.
Great to see you back.
Podcast Market Makers IL Season 2. We started Season 1, and what were we here for? We were here to, first of all, introduce our listeners to some of our Israeli business community heroes. And two, we were going to introduce Israelis to EFG as part of the constellation of Swiss banking in Israel and build some awareness around what we're trying to do here. I think we did a pretty good job with the first part. And this season, I think one of our real challenges and one of our real goals is to spend a little bit more time talking about private banking, what it means, why Israelis should actually care about private banking when they have achieved a certain degree of wealth, how it will help them with their portfolio allocation, and why what we're doing at EFG brings the international needs to the local market in a way that they can benefit the same way anywhere. Anybody living anywhere has the same sort of financial opportunities and portfolios of choices available to them.
Well, it sounds like a great plan, Joseph. But first, let's end 2025 exactly like we did with our clients. I suggest we go through our Outlook, the EFG Outlook for 2026, which provides the top 10 themes for the year ahead in terms of investment and portfolio themes. But remember, none of this is going to be investment advice, and none of our conversations will be providing any specific recommendation.
Great. So I think, first of all, let's set the stage here. What's the Outlook? The Outlook is prepared by our colleagues, led by Moaz Afzal. They are in London, but let's call it wherever they are. And they prepare this Outlook for all of our global clients. If you are a global client, of course, you've had access to this. If not, you know what you need to do. Let's just go through some of these top 10 themes because they set the stage. And one of the great things about Moaz and this Outlook, you tell me, what's the best thing about this Outlook? What does Moaz do every year?
What I like is that it goes through every year kind of like a rating on how good or how bad the previous Outlook was.
Exactly. He gives himself a grade. He's sometimes generous.
Yes, but I think he's pretty fair and reasonable. So out of the 10 themes, how many were right last year?
Last year he said he got 8 right. We're not going to tell you what those 8 were.
Not bad.
Yeah, they're on the back pages of the report. All right, let's get started here. So, look, they broke this down into different categories. We don't have to go through it. You can read the report for that. And what we're going to try and do, because this is what we try and do at EFG Wealth Management Israel, is we bring you the world. We bring you Switzerland. And so I think what we're going to do is we're going to go through the top 10 themes as described by our colleagues, but then we're going to put a little bit of an Israeli look through it.
Local flavor.
Exactly. A little bit of a local flavor. So the first, and I'm going to do this because obviously this is where I spent a lot of time, the U.S. is set to lead economic growth. Now, why did we lead with that? I think there was always some concern looking into 2025 and 2020, and now as you go into 26, about what was going to happen in the United States. There's a lot of talk about what's going on. There was a very big trade going into 2025. What was that big trade?
AI.
Or European equities are going to beat U.S. equities.
Oh, yeah, sure. that one as well, yeah.
That was a great trade. It kind of worked, but as we ended 2025, and I was on a panel recently where somebody from BlackRock actually talked about the fact that there were massive moves back to U.S. equities as we ended 2025. And so we'll see if that trend continues, but I think what Moaz is saying here is that the U.S., given some of the deregulation, some of the things that are going on globally, I think that it's set to lead economic growth once again.
Well, I think it's interesting to see. I was looking at some figures back in around May. The Europe index was much stronger than the U.S. index, but then it's some kind of reverted. So as of now, you can see since May, the U.S. index went up more than 20%, and the European index is like half of it. It is like we're back into the US clearly outperforming any index.
And what's interesting is that happened, but the U.S. waited, I think, till September to cut rates.
Yeah.
You saw the rates almost at nothing in Switzerland before that, and now you've got the U.S. on that plan. And I think one of the big questions going into the end of the year is what happens to rates as we enter 2026. But let's talk a little bit about Israel. What does this first theme mean for our Israeli
Well,
investors?
I think there's a clear correlation between the U.S. economy, specifically with the Nasdaq and the Israel tech ecosystem. Where it has been historically pretty tight correlation. If the U.S. actually leads the growth in 2026, I think we should expect the Israeli tech to also benefit from it, especially tech exports, which account for over 50% of the total exports. So we should expect it to kind of like outperform. And the Israeli scale-up companies, those mature startups, which are not startups anymore, but those that delayed their IPOs in the last couple of years, we should expect probably the IPO market to open again on Wall Street.
Well, let's not give away theme 10 yet. So we're going to hold that thought. We're going to come right back to that, but I think you're talking about exactly the right thing here.
Yeah, I think that will be interesting to watch. Let's move into the second theme. Second theme, I would say, is trough interest rate in advanced economy. What does that mean? It means that interest rates are expected to go down and towards the middle of the year 2026 to reach a bottom, and we see therefore some opportunities in emerging markets in terms of bond yields, I would say. So looking at emerging markets, Brazil, Mexico should benefit from the U.S. economy as well. So that is something that is, I would say, worth watching for those fixed income investors.
Interesting. And I'd say if we drag this into an Israel context, we just cut rates right now. There's been talk about it all year long. This was the first rate cut. I think as we look into 2026, there's expectations that Israeli rates will end up somewhere between 3.75 and 4, just because of the fiscal deficit of the last couple of years and the local risk premium. But people talk about low rates driving markets. I think, I'm not exactly sure, but the Israeli TA35 may be one of the best performing markets of the year. And so one of the things we do talk about is diversification, but this is one of those years where if you have been long shekel and long the TA35, you didn't have to do much else.
Exactly. Theme 3 is about the bond markets again. Here we'll look at where we see some kind of risks. And, if bond yields have already kind of like discounted the worst, we should look to take advantage of high yields in the US, in France, in the UK. And I would say, there's a lot of kind of like concerns that say, Europe or France could be the next, the new Greece. If you remember what happened in about 15 years ago, I think, we think that is not right. We think that environment is totally different and there are still some opportunities in there. So that is something that's also, I would say, interesting. And the support from an individual bond market could come from the European Central Bank. So from that perspective, I think this is also another area to watch.
Look, this is one of those themes where, I'm going to be honest, I struggle to find a direct Israel link here. I do think you've got investors in Israel who've got a lot of exposure to real estate globally, European cycles and things like that, where it might be interesting on the fixed income side. But if I had to give you a real Israel link locally, I struggle a little bit. So maybe we'll just put a pin in that one and go to theme 4. So theme 4: geopolitics, new alliances, state capitalism, and diverging electorate. Now, I was once told that one of the 3 things you're not supposed to talk about at work is politics. I'm not going to mention the other 2. And so let's be a little careful here. But I think the thing that comes to mind really, really dramatically as you end the war here and as you think about what's going on in the Ukraine and Russia is what's going on between the U.S. and China. What kind of rivalry is that? You've seen all sorts of 2025 was the year of the tariff conversation.
Right.
And I think that Moses' view here is that there's still going to be some rivalry, some of it friendly, some of it less friendly between the U.S. and China, but it's going to be very transactional. And so I think that that's an interesting way to look at what's going on. And in fact, look, if you look at the commentary about what is going on in the United States, where the United States is now taking certain equity stakes in some of the semiconductor and technology companies, That sounds a little China to me. And so we've got an interesting dynamic going on here. There's a lot we could talk about, but I don't know, maybe put it in an Israel context and we can come back to the global.
So I think the clear link to Israel of these new alliances theme is obviously defense. Defense spending is expected to increase in Asia, in Europe, and Israel tech, with the Iron Dome, Arrow system, and all this can certainly potentially benefit from it. So in terms of the action for investors, obviously maintaining portfolios that are adequately diversified between geographies continues to be pretty important. Israel also maintains a fairly balanced portfolio of export activity. If I'm looking at some numbers here, 38% Europe, 37% US. So a key focus here going forward of Israel is an extension of the Abraham Accords. And clearly this is something to watch out for, especially in the Gulf. Now, the war is over. So that theme is, to me, clearly a link to this, what's going on globally with those new alliances. And Israel will be, I think, at the central of that defense theme.
Yeah, I think the thing to worry about locally, and it's the unfortunate outcome of some of the things we read in the global press, is just I hope that we've reached the point as we end the war that negative sentiment that may have built does not keep investors from being strong in Israel. We haven't seen a sign of it yet, and the tech investing still remains very strong. Some of the biggest deals happened during the war. But if I had to put a risk out there, I think that's the thing that worries me the most.
Yeah, but I think a lot of investors were waiting on the sidelines to see that to tick the box. The war is over and now we can come back to Israel.
I think
so. I'm optimistic on that front.
I'm optimistic as well, but I think we got to lay it out there. All right, another U.S. part of this. We're now in the innovation and change part of the outlook. So we call this Trump's 3Ds. Doge, which is now a vestige because, if I'm not mistaken, the actual Doge office is effectively shut. Deregulation and drugs. But this really, what Mose is doing here, what we're saying in the outlook here, is that these are really three things that are pretty U.S.-centric that will drive part of the growth and why we think there's a little bit of room for outperformance in the market there. And that's, some of it's obvious, but cutting spending, we can see if that gets imported to other countries. We've heard people talk about that. Deregulation, I think one of the things, and you saw it with the LA fires, and there's a lot of talk about this in New York. The big conversation in the US right now is affordability. One of the things that could reduce high costs, increase affordability, is deregulation. And then you hear this all the time in the healthcare sector. A lot of times you hear that Americans are paying more for drugs than anywhere else in the world, but a lot of these companies are doing the R&D, and the United States citizen is funding that. And so I think to the extent that Trump is pushing these down to more global levels, those are the levers of growth in the United States.
Very interesting. I think we come across quite a lot Israeli people, Israeli investors investing in real estate globally and especially in the US. So I think here the link to Israel is potentially on this real estate opportunity. We're going to see a lot of, I would say, development in selected residential and commercial areas because of rezoning, dezoning. These are the kind of things that Israeli like. So maybe we'll see some opportunities for our Israeli people here.
Could not agree more. I think that's exactly where they're going to be targeting. Theme 6.
Yeah. So theme 6 is, guess what? AI.
I know. We were going to try and avoid it, but we just couldn't avoid the whole AI thing. You cannot avoid it. You can't avoid it.
It's impossible. It's impossible. I think all of us have some AI in our portfolios for those who invest in the stock market. So look, we do think here that opportunities are available in the, I would say, AI race. I think it will be, we think at EFG that it will be a defining phase of the 2020s. We'll continue to see a lot of competition, especially between US and China, huge capital investments and obviously a lot of innovation. So here the race is on. It's been going for some time, and I think we'll see it probably even intensify. I mean, you can see now with the top, AI companies, NVIDIA, Google, we got news flow all the time. So I think this is also going to be definitely a key theme for this year. You cannot avoid it.
I'll tell you what worries me a little bit, and that is if you think about where AI is in the conversation. In 2023, it kind of crept up and people started using it. 2024, people started talking about it as a theme. In 2025, where people started the year saying it was the end of the Magnificent Seven. We saw how the markets reacted. And now I would say this. When you build a resilient portfolio, and I think we'll talk about this in another episode further on, when you build a resilient portfolio, you're trying to get exposure to different end markets. And when you tell me about AI, I'm going to list a few things, and you tell me if they're all the same trade. And that is data centers, energy, utilities, and nuclear, and tech. Is it the same bet?
No, it's not.
All right, tell me why.
No. Well, it's not. I mean, it's I think that those are end markets are totally different. So it is clearly not the same trade in terms of end exposure, in terms of geographies, in terms of sector, in terms of clients. So to me, it's not the same trade.
So you're still all in on the AI? I think
I'm all in. I'm actually personally, again, this is not investment advice.
Not investment advice.
But I believe in AI. I think also I believe in the US AI personally. Again, not US, not advice, but I think if you see that the tech giants in China have increased their investments, they're still yet to match the scale of the US companies. And going forward, I mean, we read so much, about humanoid robots that will, provide assistance to anything from factories to hospitals and administrations. I mean, this is, I think, there's still a long way to go. So I'm a big believer of that theme, which is Team 6.
Theme 6. So I think if you think about this from an Israeli perspective, and you are a little bit, and you take a step back in AI, what I think we're thinking about right now maybe is the move towards applied AI, which is doing stuff with AI. And here I think in Israel what you've got is some interesting stuff. This is the deep tech. This is continued improvement and scaling out of the semiconductor capacity. Everybody knows NVIDIA. Mellanox is basically synonymous with AI. But cyber, you've got protecting infrastructure using AI tools. You've got healthcare where you can use AI both for discovery, both for prevention, and a bunch of other things. And so I think from my perspective, the interesting part that hasn't yet happened in AI is figuring out what to do with it. I was listening to another podcast. Yeah, we do that sometimes. And it was a U.S. infrastructure provider. And they asked him, why aren't you as a service provider also building data centers? And what he said was interesting to me. And first of all, if you think about what's going to be on AI, a lot of times in tech, you think about the delivery to the consumer. So you need a very high-speed connection to get your video. But what's interesting about the AI world is that you are loading up. So the uplink is as important as the downlink when it comes to speed, and that's where the investment is. And so, the infrastructure guys have enough work all by themselves in AI to not worry about hardware and things like that. So what I would say is I kind of agree with you. It's not over. It's getting more interesting, more diverse, and more applied.
Definitely. Yeah, I think that's a good summary. Okay, theme 7. It's called EU Revival, Europe about restructuring and reform. I think there's something interesting going on here. I mean, we've said it for many years, so maybe we'll see it in the equity market. But Europe is actually committed to increasing its defense spending, not just in 2026, but also for many, many years to come. Europe is also a leader in green energy and carbon reduction process. And innovation also is key to the future growth, and we can see that in Switzerland as well. I would say just a couple of numbers, just for you to get I would say some perspective. The German fiscal spending is also a catalyst to the potential economic improvement in Europe. Couple of numbers: 500 billion euros in infrastructure package from Germany, and also about 1 trillion euros in defense spending. So I think here we'll see some interesting dynamics that will back this EU revival, in my view.
Look,
in the EFG view as well.
Listen, I think, first of all, I think it's true. Second of all, if you look at this from an Israel perspective, Europe is our largest trading partner. Now, Europe means a lot of things because there are a lot of countries. One thing that just jumped out at me, because I've always got the Israel lens on my head, which is we published we said innovation is a key growth driver in Europe is well placed. And then we see an innovation ranking. And what's interesting there is you've got a bunch of European countries ranked in the top 10, but then Israel's number 15, and you got a bunch of the European countries ranked below Israel. So I wouldn't say Israel is Europe, but if you think about Israel being well-placed for growth and making it a good place to invest, it fits right into the same theme of that EU revival. And so I would put it there as well. And let's just remember, again, coming back to my one concern, you've got the defense on the positive side, where I think you're going to see the NATO stuff being really interesting. But let's make sure that sentiment improves so that we can take full benefit of the European revival.
Can you tell me which is the number one ranking country in terms of innovation in Europe?
This is great because we're singing to our own book, which is Switzerland.
Exactly.
Which is a great place for innovation, and stay tuned for that because I think there's a lot of overlap between the tech communities in Switzerland and in Israel, and let's see where we can go with that over time.
I always thought it was Sweden, which is actually ranking number 2, and then US number 3. So that's actually very interesting, and Israel at top 15.
So a topic that I come back to, though, where Switzerland has produced a great champion and Israel has as many people in it now, but we can't do it, is one of your favorites is tennis. Why is there no Federer
in Israel?
That would be
we'll do another podcast on that.
We'll do another sports podcast coming up. All right, here's one where I don't know. I'm going to tell you what the theme is. We'll talk about it a little bit, and then we'll bring it all home. Number 8, emerging markets have the wind in their sails. Now, here's just an interesting thing in my experience. Did you know that Israel is no longer an emerging market in the MSCI?
Yes, it's been in OECD for some time.
But do you know what is an emerging market? Korea.
Interesting. Yes.
So,
actually, yes.
That's kind of why I never really understand designations of emerging markets, but let's go through the theme a little bit.
So emerging markets always been an interesting theme. We thought it would be, outperforming the markets. Sometimes we've been disappointed, sometimes not. What is actually driving currently this emerging market theme for this year? There's a few things. Obviously, valuations are interesting. A weak US dollar is also obviously something that is impacting the emerging markets valuation. There is some fiscal discipline. Domestic demand is actually quite resilient. So overall, I think this is a theme that can be supported by many different factors. I mean, obviously, you always have some uncertainties around the emerging markets, but I think this year it will be more favorable for this for the emerging market stocks. I mean, obviously, the way to play it can be tricky, but we can talk about separately in terms of an investment advice discussion.
All right, I think that's enough on emerging markets. Bring me number 9.
Number 9 is something I really like, is private markets. We see a huge increase in private markets in portfolios, unlocking liquidity and diversification opportunities. What does that mean? What we like about it is, different themes like mid-cap, buyouts, so secondaries, and also private debt is also very interesting. So all are kind of like a good way to play this alternative investment in the portfolios, and this is a key theme for us this year. It relies, however, on selecting the right managers. So people who know what they do, people who have access to the right deals. Not only that, but people who are able to select the right opportunities and also when to exit. So I think overall, with the right players in the market, private markets can continue to benefit from already some very good results, but especially in 2026. Just a couple of data here. Assets under management in private equity and private debt, they've experienced a very, very rapid growth in the recent year, and we expect it to reach approximately something like $12 trillion and for private equity, and $2.6 trillion for private debt, which is, something to expect in terms of double-digit growth between now and 5 years forward. So I think overall this is a significant portfolio constituent for anybody who is invested in diversified portfolio.
So let me ask you a question before I look at it through the Israel lens, and that is, at what point, when a person comes to us and says, I want to allocate my capital, who is the most reasonable or the target candidate for putting a part of their allocation in private markets? And the follow-on question is, if we think 2026 is a year of unlocking liquidity, that means you already had to be there. So when you think about that going forward, where do you want to put new money into private markets next year?
Well, private markets, it's a pretty vast world in terms of investment. So you can have your money in private equity, in private debt, in some real estate also instruments. There is also some infrastructure. And we have a lot of different fund managers that allow you to do that without much overlapping, because just within private equity, you have different types of private equity. And also within the different funds, you can have funds that, where you lock in your money for 10 years, or you have the semi-liquid funds where actually you can, you only need like 3 months or 6 months or even 1 month to exit the position. So you've got different tools, different types of managers, different types of underlying investments in order to invest. I mean, most of the exposure today is really in the US because this is the biggest market. But we've seen some managers or some funds with some, European and Asian exposure as well, which is also quite interesting.
Interesting. So in Israel, look, I don't have to tell you, there's tons of funds, VC, private equity, private debt. And I would say look for some of those financial players to try and do exits as we end the year. Yeah. There is one large fund, I think an IPO has filed in the consumer space recently within Israel. So those are things to look at. I think deal sizes are going up. Exits are looking nice. And you're also at the end of some of these fund age from a vintage perspective. And so as the market opens, you're going to see some exits, which should be very interesting. And there are going to be some certain sectors that are clear winners. I think cyber, AI, defense. I have seen lag in the food and ag tech sector, but let's see if that can come back a little bit. But I think private markets for the local market is obviously a significant piece of the local ecosystem. Which brings us to theme 10.
Yes.
IPOs and M&A activity, multiple sectors set to benefit. Now listen, we both come from this world. I think 2021, as we were sitting in our basements trying to do work during COVID, pretending to do work, maybe doing some work, who remembers anymore? That was the last really good year for exits and IPOs. And since then, I don't know if it's a risk on or risk off sort of situation, whether the markets weren't ready. But here we are moving into 2026. You've seen M&A, you've seen IPOs to end 2025, picking up steam in the US, which usually leads this market in terms of size of deal and number of deals. Are people willing to take more risk as we go into the year? What's going to happen? I think a lot of people are going to benefit, but it could be interesting.
Exactly. Well, look, I mean, first of all, what happened over the last couple of years, 2022 to 2024, we're in an environment of inflation, of rising rates, of volatility. So that's not great for the IPO market. Now we've seen some kind of like momentum over 2025, and we think this will continue. Now, who will benefit from it? We think that there will be a focus more on quality over volume and high growth companies like AI, biotech, clean energy, green infrastructure. They're likely to drive the insurance market on the IPO. We feel that there's a lot of like investor demand for innovation and thematic exposure that's rising. Also, the private equity, what we call the sponsors IPO, when private equities are actually exiting, their positions and the portfolio companies go public, we think that there will be also a strong activity in 2026 as the rates are going down. And in fact, those kind of IPOs more than doubled in the first 3 quarters of 2025. So we think that this will continue going forward. So all in all, I believe that this year will be pretty exciting. You remember the SPACs? We may see some of them, but in a very selective area. And obviously, M&A activity, which has slowed in the last couple of years. This goes hand in hand, and we think that we'll also see some interesting deals there.
So you're saying we are looking at a very interesting perfect storm of economic policy, rates, currency, companies being ready for it, and investor demand. Which leads me to say one thing. If you live with an investment banker, 2026 may be a very lonely year for you.
Yeah, exactly.
But let's hope, because I think IPOs in general are a great sign for the local market, and it means we will be having to have introductions with a lot more people who have seen success because of these exits.
Yeah, and definitely also we see a correlation with the private banking world, because the more IPOs, the more exits. Obviously, this creates a lot of new millionaires, and this drives demand for investments and obviously for private banks like us.
Exactly. All right. I think that's a great place to end Global Outlook 2026.